7 days ago a war started. It is already changing your financial future. On February 28, 2026, the US and Israel launched military strikes on Iran in Operation Epic Fury. Iranian Supreme Leader Ali Khamenei was killed. Iran retaliated with missiles and drones across the region. The Strait of Hormuz, one of the world's most important waterways, was shut down. In 72 hours, global financial markets changed completely. You might think, this is a war in the Middle East. What does it have to do with my money in America? The answer is everything. Modern economies are connected. When oil moves, everything moves. When markets shake, your retirement account shakes. When inflation rises, your grocery bill rises. Today, I'll break down what's happening, what it means for your money, and how smart Americans protect their wealth. Impact 1. Oil and gas prices. The Strait of Hormuz is a narrow waterway between Iran and Oman. It controls 20% of the world's oil supply. When Iran shut it down, the global energy market went into shock. Brent crude oil prices jumped from $70 to over $83 per barrel within days. That's a 13 to 18% increase in less than a week. US gas prices hit $3.20 per gallon this week. Analysts warn they could hit $4 or higher if the conflict continues. Energy experts warn if the strait stays closed for over 4 weeks, oil could hit $100 per barrel. What this means for you? Fill your tank and expect higher prices for at least the next 30 to 60 days. If you drive a lot, this will hit your monthly budget directly. Impact number 2. The stock market. The Dow Jones fell over 400 points on March 2nd. The S&P 500 dropped nearly 1%. South Korea's stock market crashed 12% in a single day. It was its biggest drop since 2008, triggering a circuit breaker. Global markets experienced immediate volatility. But here's the critical thing. Goldman Sachs CEO David Solomon said the market reaction was calmer than expected. Historically, markets have recovered and grown during and after wars. Studies show 6 months after a major conflict, the S&P 500 average return matches its long-term average. So panic selling right now would be one of the worst financial decisions you could make. What this means for you: if you are a long-term investor, do nothing. If you are near retirement and need money in the next 1 to 2 years, talk to an advisor. Impact number 3. Inflation and the Federal Reserve. This is the most complicated and important impact. Before this war, inflation was already a serious concern. Now add an oil price shock on top of that. Higher oil prices mean higher gas prices. Higher gas prices mean higher delivery costs for every product. Higher delivery costs mean higher prices at the grocery store, at Amazon, at every retailer. Analysts warn a prolonged conflict could add up to 0.8% to global inflation. Europe is already seeing energy prices nearly double after Qatar shut down its LNG plants. Now here is the problem for the Federal Reserve. The Fed has 2 jobs: keep inflation low and employment high. But now it faces a nightmare scenario. If it cuts rates, inflation gets worse. If it raises rates to fight inflation, the economy slows and job losses begin. Economists warn a prolonged war could cut U.S. economic growth from 2.4% to barely above 1%. That means slower raises, less hiring, and more economic uncertainty for every working American. Impact number 4. What actually goes up during a war? Not everything is bad news. First, gold. It is already seeing increased demand. When markets are uncertain, investors run to gold as a safe haven. Second, defense stocks. Companies like Lockheed Martin, Raytheon, and Northrop Grumman see massive gains. Third, energy stocks. Oil companies profit directly when oil prices rise. If you already own energy sector funds or ETFs, they are likely performing well right now. Fourth, U.S. Treasuries. When global investors are scared, they buy U.S. government bonds as the safest investment. This drives bond prices up. Oxford economics analysts have specifically said oil, gas, energy stocks, gold, and aerospace and defense will likely spike. These are not recommendations, just historical patterns worth understanding. So, what are financially smart Americans actually doing right now? Number 1. They are not panic selling. Selling during a war-driven market drop locks and losses. History shows that markets recover. Staying invested through volatility is almost always the right move for long-term investors. Number 2. They are parking short-term cash in high-yield savings accounts. If you need money in the next 6 months to 1 year, it should not be in the stock market. Move it to a high-yield savings account earning 4 to 5% with full FDIC insurance. Number 3. They are reviewing their energy costs. Lock in electricity rates if your provider allows it. Consider fuel-efficient driving habits to reduce gas spending. Every dollar saved compounds. Number 4. They are watching for buying opportunities. War-driven market dips have historically been excellent. If blue-chip stocks drop significantly, that could be a chance to buy quality companies at discount prices. Number 5. They are staying informed but not overreacting. Every headline is designed to create fear. Smart investors read the facts, assess the data, and make calm decisions, not emotional ones. This war is still evolving. The Strait of Hormuz situation is still unresolved, and the financial impact is still unfolding. But one thing is certain: Americans who understand and take strategic action will come out in a better financial position. Subscribe to Think Wealth for weekly updates on how this conflict affects markets, inflation, and your personal finances. And comment below. What is your biggest financial concern right now because of this war? Your question might be someone else's too.